Here's the Google update after hours on their miss. We were buying down here at those levels, and it's coming back. The price is coming back into line where we had pre-market limit orders before the earnings report. So we're going to come up to those areas, but we got down to the 573, and now we have a huge bounce off of the bottom. So you can see that bull tape is winding off that bottom, how we could take advantage, and we did, and buy that bottom. One of the things that we're going to also highlight is, yes, your 639.57, and what is this going to do to tomorrow's option market? We will start right here in Google, okay, because we don't own any of these at all, and everyone else does. We stayed out of the way, as we said. So basically, we're going to go right down here to the 580 call, and I'm going to put that right here in this market minder. They closed at $60.80 at 569 on the day. I will be buying this for tomorrow's expiration, yes, and everyone else. Look at it. Look at all the volume up here, and that's the kind of money that they're going to steal all of that premium out on tomorrow. So that's a 580 call that was deep in the money before the 639.57. The call side premium for the people who held it are going to get taken to the woodshed. They're going to steal all the premium out of the 580 call from the public, and that they will. Let us tell you that the $600 call that was deep in the money at $42.80 is going to get marked down. And I, after this video, and MMTs will steal the bid. Will steal the bid. We will also take a look at the 585 call, which had a print at 54.80, and all that money is going to go bye-bye. Yeah. This big drop tomorrow on a Friday options expiration at a 585 call that was deep in the money shall disappear. And those people who had the irrational exuberance and did not sell into the move, well, you're going to go down substantially in value on that opening bell. And the thing about it is, us MMTs, we're going to be there to pick them up wholesale. Not only that, we're going to be going over. In fact, we're so excited that we're going to be going over to the March 580 call that we could have never bought because they were inflated and they were retail value. We're going to go right over here where these big daddies, it's a 580 put, that we're going to see how they gap those up. But most importantly is the call. The $67 is going to disappear. We could have never bought them up there because of the risk. They were inflated. And we told people, sell into the news. Now, MMTs, the gift that you will receive will be the following. We will start at the March 580. We will also look at the 590. We will also go to the $600 call. When they take out of the money, when this thing was deep in the money at the 610 call, which I will put in there, and every one of these had high print of $46, and they were up there, all the money goes bye-bye, and you get to buy. Ha-ha. I enjoy that, MMT. Another thing that we'll be able to do is we'll be able to take a look at this 605 call that had a print of $49, okay? And these are going to be the golden opportunities and making sure that the 580 is in there, the 585 even. We like that 590 calls. This is the call side of the 600 that we like because they're going to take the premium out and you get to buy it now when everyone else is getting washed out. MMT and MMT. The thing about it is, that's how it works as we had planned the strategies out. The last print on that 605 call for March 317, they were buried. Buddy, they're buried. and you get to buy at the low. What a gift. What a true and wonderful gift. Not only that, on the longer term where Google would recover over time, we can go out now to the June to the June area and we can take a look in here, MMTs, that these were $68 a contract on that June $600 call. And what does Google look like in its recovery phase? Okay? So there are going to be lots of opportunities. That's a 616. And that's the true story on that. Okay? So let's put that in here. Let's go to that June. Let's put that $600 call in here. Let's go ahead and put that $580 call in June in here. Let's go ahead and put that $595. Not only that, I'll run this $570 put is going to really go up in value, but we're going to keep an inline that this contract right here on the call side, they're going to take a lot of premium out of that 576.16 call, and I'm going to be there. I'm going to be there because I get to buy the lowest value, MMT. Okay, so as we look at the various different opportunities, once again, now that the opportunities are going to present themselves, the execution phases of buying the deflated value will be bought and sold for the actual debit gain by being wholesale at the market. I will conclude once again. I'm going to go back to the after hours chart over here, and I'm going to let everyone see how Google just hit that. Well, that's a late print, but that's where the reversal was right in here. So let's take a look at how you're going to come back down, and that's a 369 back to 587 area. And MMT, I'm so happy to tell you that we have that shopping list there, and we're going to go shopping for our wonderful ISRG calls. Look at, there's that 616 570 call, and they're going to take all of that premium out, and I get to buy wholesale. Yes. I also have concluded the opportunity phase of the training session in after hours on an earnings report with prior video analysis up to our ears, telling the scenarios and the trade management variables and how to take advantage of the mechanical processes that happen in these after hours markets, and how we have the $573 peg to the penny, and how you bounced up to 592 and just rolled right over. And here's the after hours chart. But once again, we want it to go lower, because the lower it goes, the better pricing that the MMTs get wholesale. They get to get wholesale on the leader. And because of your willingness to wait and be patient and let the report get out of the way, you'd already made money on it intraday twice today on 1/19/2012. You did well because you covered the cost of the risk. And we want to see it come on down lower again, because the lower it goes, the more money we get to save and get wholesale in all of these call structures that will lose all of their premiums miserably. They will get marked down to public, and it happens to the very best. No one will ever be immune of markdowns, but people had choices to adjust risk and then wait until the day after and look at the opportunity phases that will be presented to you at wholesale price levels on the opening bell on 1/20/2012.